Yes, Sonia, with the kind of sell-off that we've seen in the global markets for commodities, and even as there is a bit of a buying today, but on a weekly basis, we still are trading in the negative. And joining us to talk more about that is Peter McGuire. He's CEO at Exim Australia. Peter, hi, good to have you. And what a last 24 hours we've witnessed in many of these commodities. The US Fed meeting minutes actually led to a lot of sell-off in various asset classes. But I want to start with the crude oil prices because we are down now 7% for this one, the longest losing streak since Feb 2022. It's a 3-month low that we are dealing with. What is your sense on where are we headed?
Well, Manisha, I think where we headed, it seems to be, if you're looking from the 30th of July, it's been one-way traffic and it's just been a continual sell-off. I think it's taken everyone by a little bit of a surprise, and that US dollar index sitting at 93.5, 93.6. So it's bid up. Commodities have been spanked down, and possibly everything was exhausted. The numbers coming out as far as China, COVID re-engaging, and I think there's probably a couple of bucks to be stripped out of it yet.
So what's your sense then? We definitely don't seem to be going above $70 in a hurry. So are we stuck in a range now? And what is the possibility? How do you look at the risk and reward ratios stacked up?
Well, it's, you got WTI and Brent, both 64, 66. I think it's going to be a little bit softer. Yeah, I can't see any real push to the upside considering these COVID numbers and Delta variant and what we're hearing as far as storylines. Even the geopolitical sensitivity with Afghanistan this week. I've got my mind. If we would have seen blast off with the Reserve Bank of New Zealand during the week as far as a rate rise, then that would have changed, I think, a little bit more of the landscape. But as we lead into next week in Jackson Hole, I'm saying possibly US dollar a little bit bid up. Currencies have certainly been sold off against that dollar, and I just think that that's where a lot of the smart money was, trading currencies.
So, another thing to look at, really, Peter, is the demand concerns as you put on table. But on the other side, we're looking at the shale output increasing. The OPEC compliance is declining as well. And the OPEC meeting is on 1st of September. What can we expect from that?
Well, I think that's always a concern because, whilst, OPEC look at numbers, it's also the unknown during, this COVID that we're 18 months into it and where their forecast lies for consumption leading into, the tail end of the year, Manisha. So, that last 4 or 5 months or 4 months leading into Christmas. So the shale side, consumption, do we see additional lockdowns? Do they get re-engaged across Europe and the UK and the US? That's an unknown. So it's so hard to forecast for OPEC's consideration. As far as prices, yeah, I just see softness, Manisha. I don't see anything really to drive it higher unless you saw something dramatic on a geopolitical front.
So, Peter, while, most people do believe that we perhaps have seen the highs of this year already, unless there is a supply deficit in the 4th quarter of this year. But going forward, with the fact that, the investments in fossil fuels is not so great, much of the money is going in for the transitional commodities, and the crude oil demand in the global markets hasn't really peaked as yet. So even as we are discounting this year from here on, what's your sense going forward?
Well, Manisha, I still believe that there's softness because of uncertainty. And unless we see something dramatic happen, an unknown, a black swan, and whether they do something next week that really takes everyone by surprise as far as, Jay Powell, or an unknown, and, you can't forecast for those. So at the moment, I'm seeing softer over the next matter of a week or two till end of year, end of month, for the crude complex, and certainly a lot of those other commodities are going to be sold off or continue softness.
So it's been a sell-off in case of crude oil prices. It's a total sell-off that we saw in this week in metal space as well. So what are you on the buying side when you look at commodities?
Well, I'm keeping an eye on gold. I think that's been the wild trade over the last week and a half. It was spanked down to 1690 and now back up to about 1780 odd. There's nothing really that I see as far as anything to hold. Even a lot of those grains got sold off. I saw rubber. You look at hogs got sold off. So a lot of the whole complex has been spanked down. So I just want to see some consolidation until you find a floor. That gives us a better indication where there's some bargain hunting from a commodity side, Manisha. But you know, if that US dollar continues to tick up and you're at a 94 handle, then I think all bets are off, if you know what I mean.
And what are the chances that we are looking at 94 a dollar? I mean, where do you see the currencies moving going forward?
I truly think that there's every chance you could see a 94 handle for that US dollar index. We've been as high as about 93.65, and it doesn't take much to get there to 94. I think the momentum is going to push it higher. A little bit of softness as far as equity markets, and King Dollar is still the king, Manisha.
All right, Peter, thank you so much for joining us. So if the US dollar is headed higher to almost 94 kind of levels, and there is some more pain that you can expect in commodities in days to come.
Okay, and that's exactly the pain that we've seen play out over the last at least,